Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of the channel and of my webinar, which I'll go over in just a moment. I'm also on X, formerly known as Twitter, and my name there is @DougPless. So for those of you in YouTube, if you have a question, comment after the webinar, Discord is the best place to get in touch with me to post those questions. The focus of my presentation and the focus of the Options-Doug chat channel is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow and Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be talking about setups in an underlying asset. Setups can be taken either with futures, shares of stock, or options. For example, an S&P 500 trade could be taken with ES futures, SPY shares, SPY options, ES options, or SPX options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat and YouTube for your questions and comments. Please feel free to post your questions and comments, and I'll do my best to answer. And Second Winds, hello, glad you're here. Welcome back. All right, my agenda for today, I want to go over news items, economic data, events, and earnings for today and for tomorrow. Then I'll go through my positional analysis. Then I'll review some setups from this morning, and then we'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's start with news. So this morning there was quite a bit of economic data that came out at 8:30 a.m. Eastern Time, primarily PPI and U.S. retail sales. So first of all, there are a number of different PPI numbers. Core PPI came in a little bit less than expected, and then the main number came in greater than expected. Also, retail sales came in greater than expected. Also, jobless claims came in just a little bit lower than expected. And then finally, it's not shown here, but ECB did. The European Central Bank, ECB, did raise rates today. All right, so that's the economic data for today. And so far, the futures markets and many stocks traders have interpreted this data as bullish, and the market is rallying. The last time I looked, and we'll take a look at this in just a moment, the S&P 500 was above the SPY and SPX call walls. All right, so that's the data for today. interpreted as bullish. And then tomorrow is the big options expiration. Let's take a look at that. And I've talked about this all week. This is the SPX. Let me just zoom in on this. SPX delta notional at different expirations. So this is the delta notional shown by expiration. This is the big September expiration. And for SPX especially, the quarterly expirations, quarterly, monthly expirations, March, June, September, December, are large expirations. And so this is the September expiration. If we hover over this, we can read the numbers there. So this is a slightly call-dominated expiration. And if the rally continues today, I would expect that gamma notional for SPX would be slightly positive tomorrow. Certainly more neutral. It's pretty neutral today. We'll talk about that in just a minute. All right, so anyway, that is the SPX delta notional by expiration. Let's just take a quick look at SPY and QQQ. Again, here's the September expiration, very clearly call dominated for SPY, as well as QQQ, very clearly call dominated. And call delta notional, I forgot to mention, is shown by the orange bars above the zero line, and then put delta notional is shown with the blue bars. So we're comparing the orange bar to the blue bar. All right, so that is the expiration tomorrow, slightly call dominated. All right, let's get to the positional analysis now. So I'm going to start with the S&P 500. I want to go over the levels that are in play for today. Before I do that, I'm going to take a look at a larger time frame. I'm going to take a look at SPX. This is a 30-day, 1-hour chart showing price and key levels. First of all, let's take a look at price. This is the August 18th expiration, the big monthly expiration in August. That was slightly put dominated, but very, very negative gamma. And that the rally began when a lot of the puts expired, a lot of that negative gamma burned off. Market makers could buy back short hedges, and that helped to fuel a rally as that negative gamma continued to burn off and shifted to positive gamma, back to negative gamma now. And I would not be surprised if gamma notional shifts back to positive tomorrow. All right, so that's the beginning of the rally. Again, the last monthly expiration. All right, let's take a look at some levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. And we'll see on the one-day chart that SPX is trading right up against that upper weekly expected move. Again, that's the dashed purple lines. That information is available from any trading platform that has an options chain that shows expected move. And then here is the lower and upper daily expected move with the dashed blue lines. SPX trading well above the upper daily expected move. Let me point out the Spotgamma levels. These are proprietary Spotgamma levels, gamma weighted open interest available to Spotgamma subscribers. I'm going to cover the key daily levels. First of all, here's the put wall at 44.50. That level did move up from 4,400 yesterday to 4,450 today. So a bullish shift higher in the put wall. The next level up, actually the 4,450 is also the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. So a very important level, put wall and absolute gamma strike. The next level up is the 44.95. I'm just going to cover all that. The 44.95 volatility trigger. The volatility trigger is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX is trading now above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure, and that tends to subdue volatility. So just above that level is the 4,500 call wall, and that strike did shift higher from yesterday. So note a very narrow range between the floor and the ceiling. The floor, the put wall at 4,450, and the ceiling, the call wall at 4,500. And again, SPX trading above that level right now. So the put wall is the strike with the largest net negative gamma that can be expected to act as support, and the call wall is the strike with the largest net positive gamma that can be expected to act as resistance. All right, let's take a look at a one-day chart so we can get a closer look at the levels that are in play for today. All right, so the put wall is below at 4,450. Here's the volatility trigger at 44.95. Just below that, that's the upper daily expected move for SPX. Note that level was important today. It acted as resistance, then support. Here's the call wall and the volatility trigger. The volatility trigger below 44.95, call wall at 4,500. It did act as resistance as expected, and now SPX is trading above that, and approaching the next level would be the upper weekly expected move. All right, so strong day in the S&P 500, trading above call wall and the upper daily expected move, and approaching the upper weekly expected move. And being above these levels, it may be difficult for SPX to move much higher. We'll take a look at that in a few minutes. All right, let's take a look at Bookmap now. In Bookmap, I've got my own cloud notes, and I'm showing the SPX levels. So there's the 4,500 call wall. Just above that is the SPY 450 call wall. Let me just redo that so we can see all those levels. So kind of a cluster of levels there. And note there is a pretty big difference in price between ES and SPX. The last time I looked today, it was 50 points. And that's what I'm using on my charts. So the SPX 4,500 is at ES 4,550. So I have SPX levels and also SPY levels. Here's the SPY 448 level that somewhat acted as support this morning. Here's the upper daily expected move for ES. ES trading above that. All right, so those are the levels that are in play for today. All right, let's take a look at Nasdaq. shifts in levels. Let me go over that. So for SPX, the volatility trigger, put wall, and call wall all shifted higher. That's bullish. For SPY, the volatility trigger did shift lower, just 1 point. And also the absolute gamma strike shifted lower to 445. So slightly bearish for SPY, but overall, I given the hat trick for SPX, volatility trigger, put wall, and call wall all shifting higher. My thesis for the day for the S&P 500 was bullish. All right, let me check for questions. And Windmill Willie says, price above the call wall on SPX may not inspire profit taking, though since it's cash settled, that exposure can just sit there unless it's sold calls. Then they're in trouble. I'm not sure if the fact that it's a cash settled index has any impact. The S&P 500 is also above the SPY call wall, and I would just rely on the statistics that Spotgamma has, that on a 1-day and 5-day basis, when price breaches the S&P 500 breaches the call walls, the S&P 500 will trade lower. I believe that's what their stats show. So that's what I would rely on. And we'll take a look at Hero, and we can see what traders are doing with puts and calls. And we'll do that in a few minutes when we take a look at setups. All right, so that may be Windmill Willie. That may be a question to send to Spotgamma and get their take on that as well. So just send your question to info@spotgamma.com. They may be able to give you a little bit more insight. So I will tell you, for the S&P 500 index, Nasdaq index, Spotgamma assumes that traders are long puts and short calls, and market makers on the opposite side of that. So they're short calls, they're short puts and long calls. Now it's not 100%. So certainly traders may be buying SPY, SPX calls, but net, that's the assumption from Spotgamma. All right, let's take a look at Nasdaq. A lot of levels in play for today. Let's take a look at, first of all, QQQ, so we can isolate the QQQ levels. So this is a 1-day chart for QQQ. The 374 level did act as support earlier today. Here's the volatility trigger at 375. QQQ trading above that. It looks like it may have found resistance at the 378 level. And note the call wall for QQQ is at 380. All right, so that's QQQ. Round numbers in play on the low end, 374 and 378. 374 support, 378 so far acting as resistance. Let's take a look at NDX. There were a lot of NDX levels, so we'll take a look at that for completeness. So NDX, cluster of levels here, volatility trigger at 15,390. And now right around that QQQ 378 level is the NDX 15,500. That's the absolute gamma strike. Looks like it may be acting as resistance. All right, let's go back to Bookmap. So Bookmap, again, I have my own cloud notes. Got a lot of levels here. First of all, I've got NQ levels shown with red. I've got the zeros and the 50s. There's the NDX in white with red text. That's the NDX 15,500 absolute gamma strike acting as resistance. I also have QQQ levels. Let me just scrunch this in just a little bit so we can see here's the QQQ 374 level that acted as support. Here's the upper daily expected move for NQ. It's kind of unusual to have so many NDX levels shown here, but anyway, that's the levels in play for Nasdaq. All right, shifts in levels for Nasdaq. For NDX, volatility trigger shifted slightly higher, not significant. Put wall also shifted higher. And for QQQ, the put wall shifted higher as well. Oh, I'm sorry, it did not. Put wall remains at 370. The absolute gamma strike did shift higher to 375. So there's the QQQ 375 absolute gamma strike. All right, again, we'll take a look at setups in a few minutes. Those are the levels in play for today for Nasdaq. All right, shifts in levels. I've talked about that. For SPX, NDX, and QQQ, levels shifted higher. For SPY, levels shifted lower. Overall, though, my thesis for the day based on the shifts in levels, directional bias was bullish. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. I'm going to look at gamma notional for SPX, SPY, NDX, and QQQ. This is market makers' position on the gamma curve at the beginning of the day. And I really just focus on SPX, SPY, and QQQ. So note these numbers are still negative, indicating traders are long puts, market makers are short puts. But these numbers are slightly negative, closer to neutral. Also, Brent, the founder of Spotgamma, likes to look at this Spotgamma index that varies from -4 to +4. So minus 0.09 is fairly neutral on that scale. So these numbers all did shift less negative than yesterday. So again, somewhat really neutral. Gamma notional slightly negative, and if the rally continues today, I expect these numbers to potentially, for SPX, definitely shift to positive, and SPY and QQQ close to neutral. All right, let's take a look at the Vanna model now. This is for SPX. So what this chart shows, this will give some context to the gamma notional in terms of delta notional. So this is showing how market makers' delta exposure changes with changes in price. That's shown by the light gray curve. Again, showing how market makers' delta notional changes with changes in price. And then the purple curve shows how market makers' delta notional changes with changes in price and implied volatility. And that change in delta notional with a change in applied volatility is the Vanna effect. Vanna is a second order Greek. All right, so the low of the day for SPX was right around 44.79. So that's really near the bottom of the curve here. So what this is showing is there's very little Vanna tailwind there was today, meaning very little put Vanna fuel to burn off. So if SPX traded down here, let's say, down to around 4,500, and then if price increased and implied volatility drops, market makers, this would mean that traders were long puts, market makers were short puts, and significantly negative gamma if price traded down to 4,400, and if price increased, market makers could buy back short futures. And that is a put Vanna rally, but no put Vanna rally for you today. Given the positioning, the close to neutral negative gamma position for SPX at minus 100. All right, so not much put Vanna fuel to help drive a rally today. And pretty similar for SPY and QQQ. So Truman asked when the Vanna curve goes up to the right after the curve touches the x-axis means the tailwind is no longer in effect. That's correct. So at that point in a very positive gamma environment, let's just take a look. So Truman is talking about this portion of the curve. So if price continues to increase, this will become a headwind, not a tailwind. So this is when market makers gamma position shifts to positive. In a positive gamma environment, they have to trade against price to hedge their delta exposure. So if price continues higher, market makers will need to sell futures to hedge their delta exposure. So this portion of the curve over here would be typical of a negative gamma environment, and this is typical of a positive gamma environment. Here on the negative gamma portion, market makers trading with price, and on this portion of the curve, they're trading against price. They always want to remain delta neutral. So this chart, again, is just showing delta neutral, but we know that market makers want to remain delta neutral. Okay, so that is the levels in play for today. The shifts in levels, mostly bullish. We know that gamma notional is slightly negative, but pretty close to neutral. The Vanna model is not showing any Vanna tailwind if price continues to increase, more of a Vanna headwind. So my thesis for the day, looking for lower volatility and also bullish. All right, let's review some setups now. I'm going to start with the S&P 500. I'm going to look at the hero signal. All right, CoinFox asks, what platform are you using for the gamma levels? So the gamma levels are coming from Spotgamma. So I use Bookmap and Spotgamma, and I take the information that Spotgamma provides in the morning, and I put that on my Bookmap charts so I can see those levels, those gamma levels during the day. All right, Truman asks, what does the Vanna curve represent when there is positive net gamma for SPX and when it is negative net gamma for SPX? I'm not sure I understand your question. So this gamma notional that we just took a look at, that's available in the AM Founders Note, that's static. That's at the beginning of the day. and that can change during the day. Okay, looks like Truman left, deleted all of his questions. So Truman, sorry about that. Hope I answered your question. If not, you can post again or post something in Discord, and I can take a look at it after the webinar. So again, Truman, I'll be glad to answer your question. All right, let's take a look at the hero signal now, and this is from Spotgamma, available to Spotgamma subscribers. The hero signal stands for Hedging Impact Real-Time Options. So this chart is showing price for SPX, and then options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. All right, so if you trade any form of the S&P 500, this is typically the signal that you want to take a look at, the combined signal. So what strikes your attention first is that options traders have been taking negative delta positions all day. So they've been fading this move higher. All right, let's take a look at some setups. I'm going to zoom in on this chart. So this is the cash open here at 9:30 a.m. Eastern Time. And options traders were taking negative delta positions from the open. We'll take a closer look in just a few minutes to see what they were doing. So that did help set up a short. Let's go take a look at Bookmap. Let's go back to ES. Let's zoom in. So not knowing what was going to happen for the rest of the day, seeing options traders taking negative delta positions, and price trading up right to the upper daily expected move. Now this is a little bit before the cash open, right around 9:20, 9:25, something like that. There's your first short entry, and then at the cash open, ES makes a lower high as options traders were taking negative delta positions. And this may be a little bit difficult to see with the on-chart indicator, but at the cash open as well, large traders were selling with iceberg orders. That's shown by the falling light blue line. That's hard to read. There's a stop order just above the icon for a sell iceberg orders. These are iceberg orders, are what large traders use to hide their size. So we know that options traders were taking negative delta positions and large traders selling with iceberg orders. Order flow not so clear to read. Right here it was the shift from, I'm talking about the shift from green volume dots to magenta volume dots. The volume dots are market buy minus sell. Green dot means there are more buyers than sellers. A magenta dot means there are more sellers than buyers. Here the read is a little bit more clear. Test of the 449 level, and price moves down to 448. All right, so we know that options traders continue to take negative delta positions. So at a certain point today, they were not really in control anymore. So we can see the clues in Bookmap. after this these iceberg sell orders, a lot of large traders start buying with iceberg orders as price moves down. That's pretty typical. They are buying weakness. So they sell strength and buy weakness typically, or often. So here, large traders buying with iceberg orders. That is 1,928 contracts, 18 executions. So that is an aggregated symbol. If we zoomed in, we would see more smaller executions. And then here's another aggregation there of 2,790 buy iceberg orders, 19 executions. And note the stop run down to this level, making a series of lower lows. Stops shown by the yellow line, as well as these small red dots. And then price reverses higher. Sellers are exhausted and aggressive buyers start to come in as these large traders have been buying with iceberg orders. Let's zoom to the left a little bit. So after that, it appears to me that the rally was primarily fueled by stop orders. So buy stop rally, stop run, stop rally, shown by the rising yellow line, the consistently rising yellow line. Cumulative volume delta is pretty flat. That's shown by the pink to dark blue line. Pink indicates that cumulative volume delta shifts to negative. Blue indicates it shifts to positive. And then the iceberg orders pretty much level off. And we know that options traders were taking negative delta positions. All right, let's zoom out. All right, so there's only so far that a stop-fueled rally can take you, especially when price is trading above the call walls. So note this yellow line leveled off, large traders starting to sell with iceberg orders. Cumulative volume delta is pretty flat. Note the number for today is barely positive. It has been shifting between negative and positive. Let's go take a look at Hero for the entire day. All right, so that's from the cash open over there right here to the left. Traders have been taking negative delta positions all day. Trend is down for Hero. Let's see what they're doing. So first of all, we can slice and dice this into puts and calls. Very clear that traders are buying calls, but that's this orange line shows call transactions. It is positive, notional value positive, so they're buying calls for today. But this blue line showing puts is just steady down all the way. Much larger notional value, minus 4.3 billion versus positive 511 million. Traders aggressive, put buyers much more aggressive than call buyers. So in these conditions, I would certainly not be looking for a long. Let's see what 0DTE traders are doing. So unlike yesterday, where this green line that shows next expiry, so for the S&P 500, that would be options that expire today. Not so, there's not as strong a correlation. So much more of the trade is in options that expire beyond today, so most likely tomorrow. So most likely there's a lot of trade in options that expire tomorrow, and they're buying puts. All right, so again, I would certainly not be looking for a long. The S&P 500 trading above the SPY and SPX call walls, options traders taking negative delta positions, and the buy stop orders that had fueled the rally higher are gone. Large traders taking negative delta positions, or there large traders selling with iceberg orders, cumulative volume delta also falling. All right, let me check for questions. All right, take profit. Is asking about the Vanna model. I cover that every day, so I've already covered that. This just gives us it's a model to indicate how market makers may react with changes in price and applied volatility. Remember, they always want to remain delta neutral. So if the curve is increasing on either side, they have to sell futures. So in a negative gamma environment, on the left side of the curve, when the curve is rising from right to left, market makers delta notional increasing, and they have to sell futures. On the other hand, in a positive gamma environment on the right side of the curve, when the curve is rising, their delta notional is increasing again. That means price is increasing on the horizontal axis, and they have to sell futures. That's typical of a positive gamma environment. So I suggest go to spotgamma.com, go to the support center there, look up the Vanna model. I'm sure there's more information. They may even have a YouTube video about the Vanna model. And otherwise, take a look at my previous webinars on the Bookmap YouTube channel. And I cover the Vanna model every day, typically maybe 15 or 20 minutes into the webinar. I go over that as part of my positional analysis. All right, so that is the S&P 500 setup. A bearish setup, and then based on order flow and hedging flow, and then a bullish setup just based on order flow and Bookmap. Let's take a look at Nasdaq. Let's go take a look at Hero. I'm going to zoom in. So this is a combined signal for the S&P, for the Nasdaq, for NDX and QQQ. I'm going to go over quickly go over setups for the morning. So the morning, first of all, there was a very clear short setup. Then right around just before 10 a.m. that reversed. Traders started taking positive delta positions, and then they did again at 10:20. So confirmation short, and then confirmation long, anywhere from 10 to 10:20. Let's go take a look at the Bookmap. Go to Nasdaq. Let's zoom in. So here's the short setup, pretty similar to S&P 500. Resistance and a shift in order flow before the cash open. Then a pullback and a short right at the cash open as traders were taking negative delta positions. Here's your triple bottom here, right around 10 to 1020. And in the case of Nasdaq, we saw that options traders were taking positive delta positions. So we get a confirmation from hedging flow as well as order flow. You can see the shift in volume dots, magenta volume dots, more sellers than buyers, to green magenta dots, more buyers than sellers. Also, there's some large traders in with iceberg orders, buying. And price moves higher, makes a quick jump up to the upper daily expected move. Cumulative volume delta stops and buy iceberg orders, as well as option traders, all fueling the move higher up to the upper daily expected move. All right, Julio says he typed in Vanna model and got Vanna white. I go to the Spotgamma website. This is something that they came up with. So go to the Spotgamma website, go to the free resources, the support center, and type in Vanna model there, and you'll get information there. All right, let's take a look at some stocks. First, I want to take a look at Amazon. So stocks are often easier to interpret. So this is Amazon. Hero shifts bullish right around 950. Let's see what traders were doing. So right around 950, they start buying calls pretty aggressively. That's shown by the rising orange line. And just a few minutes later, they stop buying puts, start selling puts, and price responds higher. Let's go take a look at the Bookmap. So here's the reversal higher in Amazon. Whoops, wrong tool. Right at the 143 level and up to the 145. That's the call wall and the key gamma strike. Also liquidity limit sell orders at that level, acting as a magnet for price. And it looks like price has consolidated up and down around the 145 call wall key gamma strike level. All right, the next is Meta. And Slotazari asks, are there any call gamma unwind possibilities for tomorrow on individual stocks? Yes, I will definitely cover that. There's quite a bit of gamma expiring tomorrow. All right, so here's Meta. Trend break, reversal higher. Let's see what options traders were doing in Meta. Going to separate out puts and calls. This one's a little bit Not quite as easy a read, but here traders were initially buying calls. That activity slows down a bit. Price retraces. They're also slightly buying puts. So right around 10:20, they start buying calls again. They start selling puts. That's shown by the rising orange line, call buyers. Put sellers shown by the rising blue line. And when traders buy calls and sell puts, market makers take the other opposite side of those trades, and they have to buy stock to hedge their delta exposure. All right, so that's Meta. Let's take a look at one other stock, Tesla. Bullish day in Tesla. In a case of Tesla, they were, let me just zoom in on this. The rising blue line shows traders were selling puts. Nice pullback entry right around 10:20. Call buyers. They started selling calls. Then when they resumed buying calls, price moves higher. Let's go take a look at Bookmap. Tone this down just a little bit. So in Tesla, here is your long pullback entry if you miss the initial move at the open. Up to the liquidity at the 275 level, acting as a magnet for price. All right, let's take a look. Slow Desari asked about call gamma unwind possibilities. Let's go over that. All right, what I'm showing here, this is Equity Hub, also part of Spotgamma, another one of the tools that Spotgamma provides. And I have my watch list shown here below. And what I have done is ranked this watch list by next expiry gamma percent. And then I'm looking at the top gamma expiry, and notice all of these are tomorrow. So this is the monthly expiration. This is pretty typical that even stocks that traders buy, often buy weekly calls and puts, but a lot of the gamma will be concentrated in the monthly expiration, and that is shown here. Also, these percentage numbers very high. Anything over, according to Spotgamma, anything over 30% is significant. So I'm just going to go through stock by stock. I'm looking, there are a number of views shown here in Equity Hub. I'm just going to look at this composite view as a quick glance to look for stocks that have some call domination. So what I'm looking for is stocks with a lot of calls out of the money and at the money, out of the money, that will lose value, that will expire tomorrow. So as expiration approaches tomorrow, those calls, especially calls out of the money, their delta will quickly drop to zero as expiration approaches. So that's the charm effect, the change in delta with the change in time as time passes. So remember, when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. Well, when their delta exposure is dropping due to this call gamma unwind, the drop in delta as time passes, they can sell their long stock hedges, and that's a call gamma unwind that can help to move a stock lower. So this is a very reliable setup on Friday expiration, both on weekly and especially on monthly expirations. And the only thing that really would boost a stock higher is if traders are buying calls tomorrow that expire at the end of the day. That in that case, market makers may have to continue to buy stock to hedge their delta exposure. Otherwise, if traders are not aggressively buying calls, then or buying stock, this is a very reliable short setup. So we see here Netflix. I do not have Netflix and Bookmap, but we can see that this is at the top of the list at 48.5% gamma. What this chart is showing, this composite view, green shading indicates call domination, and this is light green shading indicates some some call domination throughout the price range shown on this chart. So that is Netflix. The next is Nvidia. There is some green shading. This is above the 480 level. So this is showing slight put domination with the red shading below 480 and some call domination above the 480 level. I'm going to skip over IWM, take a look at Google. So here Google, the pivot is at 135. Note the darker colors indicating more significant position size. Also, this very thick line on the border there indicates large options activity. So green above, green call domination above the 135 level. Also 41.6% gamma expiring tomorrow. So another candidate. Tesla, call domination above 277, 278. Meta, notice the darker color there, larger position size, call domination above the 308 level. AMD, not very much. Microsoft, call domination above the 340 call wall. Darker green indicating again a larger position size. All right, Second Winds ask, so there's more positive delta overall than negative. So I'm not sure I understand your question. For what instrument? We did look at the expiration concentration toward the beginning of the webinar, and yes, there is more positive delta notional for SPX, SPY, and QQQ, and a lot of that will be expiring tomorrow. All right, so the overall market, that was so I talked about again SPX, SPY, and QQQ at the beginning. Yes, it is for SPX, at least looking today, slightly call dominated expiration tomorrow, positive delta, and then for SPY and QQQ, much more call dominated or positive delta notional. And that's for today. That could change tomorrow. All right, so anyway, this is the list of call gamma unwind candidates. Apple, not so much, so we'll stop there. All right, so Second Winds, I'll let you do the math here. If you have access to access to Spotgamma here. So this is call. This is delta notional for SPX. Call is around, I'm not sure what this total number is, but 330 compared to 258. Positive 330, negative 258. So you can do the math there. And Truman asked, would the current Friday stock price need to be in the green area of the curve to experience a delta unwind? No. So especially if it is not, if it's below the green area, that means that all of those calls, as expiration approaches, their delta notional will quickly go to zero. So remember, at expiration, the delta for an option is going to be either 0 for out of the money or 1 in the money. So those out of the money calls, so if prices, especially below that green area, those calls are quickly going to lose value as expiration approaches. And they are quickly moving to 0 as Friday afternoon expiration approaches. All right, so Solidazari, there you go. There are your Gamma Unwind candidates, at least the ones that are on my watch list. All right, let's take a quick look at the indices, S&P 500 and Nasdaq. So the pressure, the negative delta pressure from options traders continues for the S&P 500. Let's check Nasdaq. Check Nasdaq. Oops. And so now the options traders have, starting around 12:15, really stepped on the gas with the negative delta trades. All right, so Frank asked, hello Frank, it is call dominated for X tomorrow. Does it indicate gamma notional positive? We'll see tomorrow. So it kind of depends on how things end up today, but I would expect the gamma market makes position on the gamma curve and a call dominated options expiration to be neutral or slightly positive. And you're welcome, Second Winds. All right, let's take one last look at Bookmap at S&P 500 and Nasdaq, and then we'll wrap it up. All right, so it looks like now the 450 level, the SPY 450 call wall, may be acting as support. And let's take a look at Nasdaq. So maybe Nasdaq finding support at the QQQ 377 level. All right, that's all I have time for. It looks like there were some easier reads in stocks today. Good setups, good long setups in a number of stocks. All right, tomorrow, remember, options expiration. SPX has two settlements, the AM settlement and the PM settlement. Also, Michigan consumer sentiment out at 10 a.m. And then we'll talk about it tomorrow. And we'll also keep these call gamma unwind candidates in mind and be looking for watching hero to see what options traders are doing during the day and look for potential short setups. And we'll talk about that tomorrow as well. So everyone, thank you very much for watching. Thanks for your questions and comments, and I will see you tomorrow. Bye.